With me today, I have Gervais Williams, Head of Equities at Premier Miton and manager of a number of funds, including the Premier Miton UK Smaller Companies Fund and Premier Miton UK Microcap Trust. Hello, Gervais. Nice to see you again.
Hello, Lee. Nice to be here.
First of all, I'd like to talk about the performance of the Premier Miton UK Smaller Companies Fund and the Miton UK Microcap Trust. The fund's up around 60% in the past 12 months versus just 7% for the benchmark index, and the trust is up over 30%. So it's been a crazy 2020 for markets. Could you just explain to viewers the drivers behind the outperformance of the fund and the trust, please?
I think you have to set it in context to some degree. I mean, prior to this last 12 months, if you remember last year, there was gridlock in Parliament. We didn't know whether the Labour Party or the Conservative Party were going to drive Brexit. Then we found that the gating of Woodford unsettled investors. The problems were mainly related to private companies. We don't have any private companies, but people got worried about smaller quoted companies, and they were generally very cautious about that. We saw that starting to reverse 12 months ago when we saw the election of a clear lead for the Conservative Party in this case. And then more recently, with the uncertainties with COVID this year, there have been some companies which haven't just survived, but they thrived. And on top of that, even small quoted companies can still grow when the world's not growing. So it's a combination of coming from a very low base and a year when actually certain companies have actually delivered unusually strong returns.
I mean, just looking through some of the big holdings at the Smaller Companies Fund, a few star performers really jump out. I mean, I'm thinking about Jubilee Metals and Carrero Network Security specifically. I mean, could you tell us about these two and why you own them?
Yes, I mean, what we're really interested when we meet companies, and fortunately, there's a great universe of quoted companies. More than half of the total listed companies in London are less than 150 million market cap. There's, the opportunity to meet a vast number of companies is excellent. So we meet companies, and what we're really interested when we meet them is how much possibility is there for them to generate an abnormally large cash payback. And this is obviously to do with many years of investment in many cases. And as they get nearer the cash payback, obviously, hopefully the cash starts to come in. So Carrero has been investing in many years in a technology which allows mainstream sites to deny attackers, particularly those people who are trying to take your website down with just vast numbers of people inquiring. And so they've already had a very strong history of delivering for major clients. I mean, the Fed in the US, which determines interest rates, uses their technology. Now, the real interest in this company was that actually they started working with a company which is in the US, based in the US. And it's through this company they've actually found that they've got extra sales coming through. And that's been the main driver of the business. They've got involved embedded with a US company, and it's the sales which has driven that growth and the share price performance. I think Jubilee Metals is a different example. It's involved in refining metal out of tailings, mining tailings. So after the mines have been finished, they take the tailings and they refine out the extra metal which is left in there. It's a very good thing because actually they clean up the area after the mine's finished. They reduce all the heavy metals in the soil and such like. So they do very good things, but they also make very substantial cash payback on it. And they've managed to expand their footprint, bring in some new mines, and effectively generated lots of cash. And even now, their share prices perform very strongly. Their valuation in terms of current P ratio and cash generation still looks relatively low, considering that their share price has already risen fourfold since March of this year.
Of course, well, I mean, you still clearly like those two companies. I mean, are they? I mean, they take up quite a lot of the account for a lot of the portfolio at the moment. Would you, if there was room in the portfolio for them, would you buy at these levels still?
I think Carrero, actually, we have taken some profits. It's a very good company. The Juniper network is very, very exciting. But if anything, we've been slimming down on companies which are to some extent slightly correlated with NASDAQ. The NASDAQ trade may peak out at some stage in the future. And so we've been slimming down those holdings. So actually, I wouldn't necessarily buy into Carrero at the moment. But Jubilee Metals, I know the share price has gone up an awfully long way. But in terms of its cash generation and its forecast cash generation thereafter, and on top of that, the recovery of the Asian markets, perhaps, and perhaps some of these metal prices to go up and then to make even more profits than expected, is still so good that we are still pretty keen on Jubilee.
Okay. Both of those companies have traded as low as just a few pence over the past 12 months. Now, picking these types of stock in the hope of them doubling or better is what many smaller investors strive to do. Now, I guess they'll all be keen to know, how do you do it? I mean, what criteria do you look for in a penny stock that could one day become a much bigger business?
Well, actually, interesting enough, I don't mind whether it's a £10 stock or a 1p stock. Clearly, it's more fun if it's a penny and it doubles to 2 or 3p. But most particularly, we're looking for the fundamentals, and it's about this cash payback. So we're looking for companies which are either investing now for a cash payback quite quickly, or if they have invested, such as something like Jubilee Metals and indeed Carrero in the past, people may have not have recognised that all that investment is going to lead to a cash flow in the short term. So the main thing is we're looking for companies about now. They're looking, you've invested this cash or investing this cash. Is this going to drive sales? We need sales growth to generate more pound notes for the future. We need sustained margins, so you need to be very comfortable on margins. If you get sustained growth and stable margins, then of course that generates more cash. And if you're investing in a company with already a strong cash balance sheet, and both these companies have net cash balances in their balance sheet, means that actually then any surplus cash comes on top, and it then drives share price in a big way rather than just repaying debt. So it's very much those three dynamics which we're looking for. And just with the kind of nature of the unsettled market, and with COVID and people being very anxious generally, actually the opportunities were particularly strong this year to identify quite a number of those.